Okay, good afternoon, viewers. Last time we stopped on ethical requirements of a management accountant.
5 new Facebook messages.
So today we are going to continue from where we stopped last time, and we are going to be talking about the cost classification in detail. But before we head there, allow me first give you some few highlights of the items which we are going to be seeing within the cost classification. The first one is cost. What is cost? A cost refers to the amount of resource that is sacrificed in pursuing an objective. First, the amount of resources that are sacrificed in pursuing an objective, or that is given up in exchange of goods and services. These are the expenditures we incur in the production of a good or a product or rendering a service. These costs are usually expressed in monetary values or in monetary terms. And these costs, they include human labor, a form of human efforts, material, resources, time, and utilities consumed. As we know from the point of view that cost is both or combines both the actual cost and the notional costs. Actual costs, those are the physical items that are incurred in the production of a certain item. Let's say the material, the human effort, that's labor, and the other expenses. But with the notional costs, those are the risks we've incurred or the opportunity cost that we forego in the production and delivery of a good. This notional cost, you can talk about, these risks may include, let's say if you have seen that in a certain environment, there are some things which can distort the production. And by the time you start up the production plant for producing a certain item, you know there are certain risks which are involved in the production of those items. So when you're computing the total cost that is incurred in the production, we take into account the things we can really see, the physical items we've incurred, and that is the actual cost, and the notional cost or the other risks we've incurred in production of certain goods and services. I wanted to explain something about the cost unit. That's the other term, it's called a cost unit. This is a unit of quantity of a product or service in relation to which costs may be ascertained. It's a physical item. It is a physical item or a product, a single product to which costs are ascertained, that you can find out how much are we going to be spending in terms of the raw materials, labor, and other expenses to the production of that particular item. Let's say it can be a liter a kilogram of sugar, a kilometer, like in terms of for these people who are dealing in services, you find that someone is charging transport cost as per the distance or as per the person who is involved in the movement. So those are the things we talk about as the cost unit. It is a single item, or it is a unit, one unit of a product to which costs are ascertained. That's what we call a cost unit. Then there is also a cost center. A cost center, as you hear the word center, it's like a collection point. It can be a process, it can be a department, it can be an output. But in a whole, the other time when we talked about the cost unit, we said it for it is for per unit, but this one, it is for the whole units we produced. So these costs we accumulate them to determine how much we've incurred in the production or delivering those services. This is the location, person, or item of equipment for which costs may be ascertained and used for the purpose of cost control. You can also define it as it is the segment of a business. A segment will mean it can be a process or a department, all other organization in which costs can be segregated, with the head of that segment being held accountable for the expenses. That department can be, let's say, a production department, but that production department is having a production manager. That production manager is the one responsible for the costs we've incurred in the production department itself. That's what we call the cost center. It's like a collection point. It's a pool where we allocate we ascertain those costs we've incurred in that particular department. We can talk about the cost objective. The cost objective, it addresses the purpose for which cost information is required. It's our aim. What are we aiming at? We are aiming at minimizing costs. So our aim is to ascertain the costs we've incurred in the production of a certain item. And that's what they mean by a cost objective. A cost object is an item for which you are separately measuring cost. It's that objective where the cost ascertainment is meant to be done so that we can know how much we've spent on a certain item. We can talk about the example of a cost objective can be an output. The most common cost objective are a company's product or service, since it wants to know the cost of its output for profitability analysis and price setting. Our aim as a manufacturing company is to produce output or to render a service, but we want to know how much are we going to spend in the production of that certain item. And when we know the costs we've incurred in the production of that output, we can be able to determine the profitability of the item we have produced, and we can also set a selling price for those items we have produced. It can be an operation, it can be a department, it can be a process. As I said, it can be even a business relationship. How are you related with the other person? We may be trying to find out how much costs are we going to incur in our relationship between this company and the other, let's say the supplier, the customer. How much are we going to incur so that we engage ourselves with the supplier, when we engage ourselves with the supplier. So that's all about some of the items we are going to be seeing in the costing classification. Allow me go to the next slide, and the next slide is having a cost behavior. But for the cost behavior, I'm going to do another video where I'm going to talk about it on its own, because at least for it, it has some computations and some graphical representation of which I need you really to grasp, because when we do those calculations, you try to understand how the costs behave depending on the changes in the level of activity. But here I'm just going to give you a brief view of how costs behave. This is the way costs, a specific cost reacts to a change in the level of activity or activity level. And they behave in three ways. We have the variable costs, we have the fixed costs, and we have the mixed costs. For the variable costs, these are the costs which vary proportionately with the changes in the level of activity. The word, when you're defining variable cost, don't forget the word proportionately. It doesn't necessarily mean that the costs are increasing just because even the activity level is increasing, but it should be in a proportionate way, or in proportion. The costs are increasing in proportion to the changes in the level of activity. As the output increases, we expect the variable costs also to increase in the same proportion. So don't forget about the word proportion, because it's one of the keywords which really makes the definition become meaningful. So we can talk about the fixed cost. Fixed cost, these are the costs which don't change with the level of activity for a specified degree, or in short run, you can put, there is that condition we always add. You don't just, because we know that fixed cost, yes, those costs, those are the costs which don't change with the level of, which don't change irrespective of the level of the change, irrespective of the changes in the level of activity. But to a certain point, these fixed costs, they change. And I can give you an example. If, let's say, a company is renting, because one of the good examples of fixed costs, we have rent. Rent, if the company is renting a certain building, you will find that even if the company is not producing, we are incurring that cost. That's why we are saying it is that cost which doesn't change with the level of output. Even if the level of output increases, the other fixed cost for them, they will remain constant. But to a certain degree, as I'm explaining, we've said if a company is renting a building, we expect that even if the company is not producing, it will be incurring the rent as an expense. But take a scenario whereby, let's say the building we are renting, it has a capacity of carrying, let's say, 10,000 tons of let's say, soda. And if we exceed the 10,000, if the capacity of the building is capable of accommodating 10,000 units of soda. So if we produce more than 10,000 units, it means we have to incur an extra cost of renting another room, which will accommodate the items which are in excess of the 10,000, which is the accommodation capacity of the building. So by incurring another extra cost, meaning on top of what, let's say you've been incurring 10 million as your rent, When you go ahead and rent another building, you'll also pay an extra 10 million as in rent. So, which makes the total fixed cost to increase up to the 20 million. The 20 we paid for the items up to the full capacity of the building of 10,000 units, and the extra units we produced in excess of the 10,000. So that's how fixed cost can change, but they change and they remain constant to the extent, because if you go ahead and rent another building, you will incur the same cost because it will be of the same capacity. The cost will remain the same, but we shall have an extra cost we've incurred, which makes the fixed costs to change at a certain degree. So when you are defining, it's very, very, very nice to add that word. Let's say they don't change in a short term or in the short run, because there are some conditions where in the long run it may change. So allow me proceed. I want to explain something about the cost classification. What is cost classification? This refers to the assembling of costs in different categories based on their common attributes. Here we are grouping costs according to their common characteristics. And one of the categories of cost classification, we said it is cost behavior, but that one, as I've given you the small highlight of it, I'll explain more about it when I'm going to do another video for it, because it has some computations of which I want you to take note. That's why I'm going to make it a video. I'm going to make its own video so that you get to know more about it. So we can classify costs according to the behavior, as I've said, how costs they react to changes in activity level in terms of the variable cost, fixed cost, and the mixed costs. Of course, the mixed cost, for them, they have a fixed component and a variable component in them, as we shall see in the next videos. So cost classification, assembling costs into different categories based on their common attributes or characteristics. Okay. So we are going to be seeing the different categories of how we can group costs or how we can classify costs. The first one, we said classification by behavior, and that one I'll clarify more about it in the next video. The second thing we can talk about is classification by traceability. This classification by traceability, it is in relation to the cost unit or the cost center. Because as we say, the cost unit, it is the final product. In this, when you say classification by traceability, we mean that how costs can be traced on the final products. Here we are saying, if expenditure can be allocated or traced to a specific cost center or product in an economically feasible way, then it's called direct. You can highlight this one. It is called direct, so that if we can directly trace the cost we've incurred on a particular item, then those are the direct costs. We've said classification by traceability is how we can trace the costs we've incurred on a particular product or in a particular department or process. If we cannot trace those costs directly to the product, then they are called indirect costs. So you get to know the things that when the cost is directly traced, or you can directly allocate it on a specific product or specific cost center, then we call it a direct cost. If it cannot be traced directly to the product, then they are called indirect costs, and those are the overheads. We shall see how we can get their actual costs. This classification examines the extent to which costs can be traced to a specific product or cost unit. That is classification by traceability. We are trying to find out how we can trace a certain cost we've incurred on the output we've produced. Then the other classification we can talk about is classification by nature. Classification by nature, this is done according to what they are or their natural grouping. Here we are just talking about these costs in how they really occur, like naturally how they occur or how they are. We can talk about if it is material, then the cost will be material cost. If it is labor, then the cost will be labor cost. If there are other expenses, then we can call them overheads or expenses. This classification, we are just looking how classification by nature, we are looking at how those costs, how they are, or depending on their natural groupings. So you have to understand that when you are grouping costs by nature, we group them into three. We group them into material cost, labor cost, and the expenses. Material costs, this refers to the cost of material of any nature used for the purpose of production of a product or a service. So when you are determining the cost of the raw materials you are incurring in the production of a certain output or a certain unit or product or service, then you have to incur their incidental costs you've incurred. Leave alone the cost you've spent on the materials themselves, but there is also the carriage inward or the transport costs you've incurred to transport those raw materials from where you got them to the place of work. There are also other taxes you pay when you are, let's say you are shipping the raw materials from abroad. There are other charges you pay, which are supposed to be included in the valuation of the cost of that raw materials. But you should also know that when you are valuing the materials, you should exclude the trade discounts, because in accounting, trade discounts, they are not recorded anywhere in the financial books, because those discounts, they are not, you have not actually paid them. We record the money you've paid. Even the taxes, if let's say someone is shipping raw materials from, let's say, from abroad, you find that there are some taxes you pay, and some of those taxes, they may be like in VAT. You may find that some taxes you are paying, they are claimable. You can go and claim them, and they refund you back the money you've paid. So those ones, we exclude them when you are valuing the material cost. But the other thing I want you to take note about is that when they ask you what is material, please don't explain the material cost. When they are asking for the materials, make sure you are explaining the materials, not the material cost. And when they are asking for material cost, make sure you're not explaining materials. Materials, the difference between materials and material cost, material is, those are the physical substances which are used in the production of goods and services. Whereas the material cost, this is the cost of raw materials or the cost of those physical substances which we are going to use in the production of goods and services. That's one of the classification by nature. That's material cost. The other one is the labor cost. In the same way, when you are told to explain labor, don't give labor cost as a definition. When you are told to explain the labor cost, don't again explain the labor itself, because the difference is labor cost. This is the cost we've incurred on the human effort which are used in the production of a product or delivering a service. But labor itself, those are the human effort, whether skilled or unskilled, that is used in the production of goods and services. So the cost we spend on labor, they may include the salaries and wages paid to permanent workers. It can be in terms of overtime, gratuity, and other bonuses, depending on how the company is paying its employees. So the other one, we can talk about expenses. Those are the expenditures we've incurred, other expenditures other than material and labor we've incurred in the production of goods and services. So allow me go to the next classification. We have classification by function. Classification by function, here we are talking about a function can be a department. So we are classifying those costs according to where those costs were spent. If let's say those costs were spent on administrative administrative work, then we group those ones into administration and the office expenses. If those costs were incurred in the manufacturing department, then we combine them as our factory expenses we've incurred. If those costs were incurred in selling the items we've produced, then we call those costs as the selling and distribution costs. So this classification by function depends on how the business is performing, because some organizations have different departments. So we accumulate those costs depending on how those costs were utilized in different departments. If the costs are in the administration, we group them into administration. If they are into production, we put them into production. And these costs, they include production or manufacturing costs. This is the cost of all items involved in the production of a product or a service, such as direct material, direct labor, direct expenses, and other factory overheads, so long as they have been engaged in the production process. The other thing, we have the administrative and the general expenses. You can as well add something here, and you call them administration and general or office general costs or office expenses. These are expenses incurred for general management of an organization. For the general management of an organization, these are costs which are incurred in the general management of an organization and are in a nature of indirect costs. Why are they in the nature of indirect costs? Because those costs, they are not incurred in the production of the goods and services. They were like supporting costs. Yes, we've incurred certain costs, but they are not directly traceable to the cost. So they are incurred, they are incurred not indirectly in the production process, and they are termed as administrative or office and administration overheads. And where those costs can be spent, those administrative officials, for them, their role is just to formulate policies, to do the directing the organization and controlling the operations of the organization. So they assist, they are the ones overseeing the entire production, but their cost cannot be directly traced to the output. Then we have the selling and distribution costs. Selling and distribution costs, these are also indirect costs related to selling of a product or a service. These may include the depreciation of the delivery vans. It may be the sales commission, salesman commission, and other bonuses. Maybe the cost of advertisement, and most of the customer related issues like giving them courage outwards and giving them some trade discounts if they can qualify for. Then we have another category, which is the research and development costs. These costs are spent mainly on doing innovations and carrying out some research to help in the to help in the production process, whereby by developing new product ideas and adding some other requirements, or looking for new ideas where you can improve the product. Let me talk about the another classification by basis of controllability. This is mainly how costs can be controlled by the actions of the managers or by the actions of the management. These costs can be, are those costs being incurred to the extent that they can be controlled by the organization, or they are influenced by external factors? They cannot be controlled. So when you are looking at these costs, we look them into two ways: the controllable costs and the uncontrollable costs. With the controllable costs, these are costs which are regulated or controlled by specific members of the organizations. Most of the variable costs are controllable costs, like materials, wages. The reason why they are controllable is that you are the one, it's the company which determines how much we are supposed to pay the workers, or the amount of electricity the production plant may consume. If there are no wastages, the materials we need, it's the company to determine how much of the material they should incur, depending on the number of units they want to produce. And other variable costs, because we say the variable costs are controllable costs, because their costs can always be influenced by the management or the actions of the organizations. Then there are other costs which are uncontrollable, and most of the times these are the fixed costs. Fixed costs like rent. When you are renting a premise, they just give you their cost of rent, you cannot influence that, or you are not directly involved in the determination of the amount that you are going to be paying. So that's how they classify those costs by the basis of controllability. The other one, we can talk about classification on the basis of normality. Classifications basing on normality, costs are classified according to whether they are normally incurred at a given level of output in the condition in which the level of output is normally attained. There are certain costs which we incur, and part of them, they may be due to the normal condition of how we are producing certain items, or they've incurred just because of the abnormal situations which came about and we were able to spend more than what we should have spent on the production. These are categorized into the normal costs and the abnormal costs. Normal costs, these are costs that are incurred under normal operating conditions and are always expected to be incurred in the production, in the process of providing goods and services. It's like when you are engaged in manufacturing, let's say you are manufacturing products, we expect that there must be normal losses. Those normal losses may occur, or these normal costs, we are supposed to incur them, like the cost of raw materials. We expect when you are incurring, when you are engaged into production, we expect you to incur certain cost of material, labor, and others. But there are other costs which may happen, like you may incur costs when the machine breaks down. The machine breaks down, it's not that you are supposed to incur that cost, but since it has occurred under an abnormal working conditions, so you find that you've incurred that cost, and some of those abnormal costs they incur, when we incur them, we transfer them to the cost and profit costing, the costing, profit and loss account. Then for the other normal ones, for them we can put them in the cost of the item themselves, but these abnormal costs, they are not supposed to be part of the cost of production. But the other abnormal ones, they can be part of the cost of the production. Then we have the second last, which is classification for decision making. These are these costs. Every decision involves choosing from among at least two alternatives. Only those costs that benefit, those costs and benefits that differ between alternatives are relevant in making a selection. So these costs we may incur certain costs because we wanted to do a project appraisal, wanted to determine the net worth of certain projects before investing in our money. So by doing so, there are costs which we incur, and they will help us make a decision. And there are also other costs we've incurred in the comparison of those items, even if you select, because by the time you make a decision that I'm going to be producing this item, you must have incurred some investment appraisal on different ideas in which the company should invest its money. So the other items which you did not decide to produce, you incurred some costs on them, and that's the opportunity cost. These are the examples of the costs which we incur when you are making decisions, like the opportunity cost. Opportunity cost, This is the benefit, potential benefit that is given up by selecting an alternative idea over the other. These costs, we incur them when we are making a decision. It is the alternative foregone when the actual decision has been made, and that's opportunity cost. So the other one, we have the relevant concept costs. These are costs which are pertinent for a specific purpose or situation. These costs differ between the two alternatives, and they are crucial in making decision. So we have those different costs we incur when you're making a decision. The other one, we can talk about the irrelevant costs. They are those costs we've incurred when you're making decision, but they were irrelevant. But they were important in the sense that they helped us to find out what we can really produce. These represent costs that do not differ between possible alternatives under consideration. These include the sunk costs. These are costs that has already been incurred and cannot be changed by any decision made now or made in the future. You have already incurred, let's say you have committed an investment of a huge amount of money. You cannot reverse, you cannot get back that money. Those are the costs. Then the other one, let's look at the last classification, which is based on time. These costs can be classified as historical and predetermined costs. The basis of time is when those costs are incurred. If it is historical, it means those costs were actually incurred, or they happened in the past. But if it is a predetermined cost or a standard cost or a budgeted cost, it's something you just forecast. It is in the future. So these costs, which are classified based on the basis of time, they include the historical costs. These are costs ascertained after they have been incurred, and such costs are available only when the production of a particular thing has already been happened. Let's say you have purchased a motor vehicle, let's say 2 million. If you have already incurred that cost of 2 million, then that one becomes the historical cost of that item for the rest of its useful life. Then this predetermined cost, these are costs that are estimated and they are set in advance in a scientific way compared with the actual costs for adopting controlling measures. These are costs we just set, and when the actual cost happens, we compare it with what we had suggested, and we see whether we have a variation or we have incurred exactly what we had planned. And that's all about the cost classification. And I'm hoping to stop here for today. Then the next one will be about the different types of cost, and I talk about the costing behavior, because for it, as I said in the beginning, there are some computations. What I want you to do is to follow and subscribe to my page so that you get notifications whenever I drop a new video. Thank you for watching, and God bless you.